Tuesday Talker segment with Chad Romero, who, of course, has been with us all this morning so far. Man, it's been a blast. Thank you so much for hanging out this morning.
No problem. I'm really happy to be here.
All right, so we are talking about having the right amount of life insurance for your situation. So many good questions coming off of this. I think back to a conversation my wife and I were having about life insurance of how much is the right amount of life insurance?
Yeah, look, we use a pretty simple formula, but I'll tell you, it's some people say 10 times your salary. We use a very basic 3 components. Okay. Number one, you want to pay off your debt, right? House, cars, credit cards, right? So how much is that, right? That's one number.
Right.
The next is children's education. So are they in private school? Do you plan to pay for their college? We want to make sure that those things are factored in also. Are they going to go to LSU, law school, or UL? We kind of get that amount. The last component where a lot of people get a little bit, not hesitant, but like, okay, is income replacement. So if I take home, $5,000 a month, and I'm 32 years old, what is my earning potential, and how do I replace that income to maintain the current lifestyle? So those are the 3 components.
Very good. 232-1542. We do invite your calls as a part of this as well. So one thing to touch on as well is, what would you say the differences are between life insurance through your job or individually buying life insurance?
That's a great question, and we always take that into consideration when we look at people who have some of these employee benefits, if you will, maybe have it at work. The biggest thing we look at is with people changing jobs so much now, a lot of these benefits are not portable. So hypothetically, if you have a large chunk of your life insurance through your group plan, and they let you go and 3 weeks later something happens to you, a significant part of that will not pay out unless it's what we call portable.
Wow.
You have to make sure these things are portable, and a lot of times they're not affordably portable.
Okay, now when you say portable, I get what the word means, but what does it mean in this setting?
So it means so you work for ABC company, and they provide a life insurance policy for you that you pay for through the company.
Right.
If you are removed from service or don't work there anymore,
right,
that's
so the money doesn't travel with you.
It doesn't travel with you.
Yeah.
Some plans do say, hey, you can take it with you at this price. So some plans do offer what we call portability, allowing you to take your life insurance with you. All the health insurance, disability, a lot of these, 90% of all these other ones are employee benefits. So you have to be working there to be able to reap those.
So let me ask you this. What age, because look, we have people of all ages listening. We truly do. I mean, that's one cool thing about this station is you'll have teenagers that are listening along with their parents. You'll have young people that are in college listening. You'll have people in different stages of life. What age would you recommend that you start really thinking about life insurance?
I think it's more, look, the biggest caveat with life insurance is you have to be healthy to get it, okay? The younger you are, the cheaper it is. Everybody knows that. So for me to talk to a 24-year-old that just graduated college,
right?
But I know it seems crazy, but buy $500,000 of life insurance for $30 a month because it's the future. It's the insurability that we're looking for. I'm trying to plan 40 years down the road. If you plan on having children, you plan on let's not wait, till maybe something happens physically or anything like that. So it's so affordable at that age that get all that you can, and that's the big misconception. Well, I don't need all that. I truly try to give my clients as much as they can. I know I don't want to overinsure anybody, but no check I've ever written to anybody have they said, this is way too much. Why don't you just give me it? It's so expensive these days, especially if you have kids. Get everything you can and balance in affordability, obviously.
Now, when you talk about getting it at a young age, and see, that's why I brought it up, because it seems unconventional, but a lot of those unconventional ideas help prepare people better on down the line. And so I guess the follow-up question to that would be, if someone gets life insurance, say at 24 years old, when they don't even think that they need it, they still feel invincible. Life hasn't fully hit them yet where they're not invincible.
Right.
Okay. As they move along with the life insurance policies, as they get older, will the cost increases still go up for them to be able to get life insurance, even though they have already jumped in with a certain company?
So once they're locked in, that policy will not, depending on the type of policy you get.
Okay.
Right? There's a bunch of term 20, that opens up another can of worms and gets a little bit more in depth. But the longer you wait to get it, the more expensive it's going to be.
Yeah.
That's kind of the biggest caveat. So you can get, at 24, you can get 20-year term where it lasts for 20 years. You can get 30-year. You can get some other policies that last till age 80. So look, talk to your advisor. Call your guy. I'm not, ask them. Say, how much can I get? What's the price? And look, you've got to plan for the future. If you have a hiccup in your health at age 27, they find something that would either rate you or make your price double. That's the reason to look at. And look, I have parents that are starting to buy this as a graduation gift for college.
Yeah, I have heard that too.
For the next 10 years, mom and dad are going to pay this small policy, and they start in a family. They maybe get, baby. So it really just gets them off to a start.
So go through those 3 steps one more time, because I thought that was key. And for anybody that's just now joining us, or maybe they didn't get a chance to write it down. I mean, I did, but that's because I'm sitting here at a desk.
Right.
But for those people that were listening or just maybe tuning in, give us those 3 steps again to determining how much life insurance to get.
So the formula is, number one, we want to pay off all the debt. Okay.
And that includes mortgage?
I want it all.
Okay.
Mortgage, credit card, cars.
Yeah.
We'll get into the business stuff, but all debt. Okay. So now you don't have a house note. Your house is paid for free and clear. Next is children education. If your children go to, private school, I want to factor that in, because you've got to continue to pay, $5,000, $6,000, $7,000, $12,000 a year.
Right.
So we factor that with college, right? That all falls under school. And then the last one is income replacement. What does it cost for me to get $5,000 a month for the next 30 years?
Yeah. Can you just absorb it and it really not a hit at all to your family?
Right.
Yeah.
I want no change in lifestyle. Baseball, weddings, cars. Like, we factor and get really detailed about that amount.
So paying off that debt, your children's education, and the income replacement.
That's it.
That's the formula.